Today we are going to be talking about Alibaba. And just recently we got news that the founders of Alibaba have bought over $200 million worth of the stock. I also want to discuss the economy in China because we're starting to see some reports about deflation as well as consumer confidence hitting all-time lows. And we'll leave off by taking a quick look at their upcoming earnings announcement. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Alibaba has had a rough past 5 years, with the stock trading down over 50%. However, on the news that Jack Ma was buying back into the company, the stock ran up over 7% in a single trading day. In the fourth quarter of 2023, co-founders Jack Ma and Joe Tsai bought more than $200 million worth of Alibaba stock. According to regulatory findings, Joe Tsai purchased over $150 million worth of the stock, and Jack Ma purchased around $50 million worth of Alibaba shares. There are a couple of things to keep in mind when considering these purchases. The first is the fact that Joe Tsai is still a chairman on Alibaba's board, and that's important to understand because it shows that he has inside information about how the company is performing and is showing a lot of faith in the business and where it is headed in the future. The second thing is around Jack Ma and his public image throughout China, because a few years back we saw the Chinese government really crack down on Jack Ma after he made comments publicly criticizing a lot of their decisions. This forced a lot of regulations against Alibaba, and the Chinese government really cracking down on their business, claiming that they were a monopoly, imposing a lot of fines against Alibaba, and this hurt them overall. So for Jack Ma to actually be purchasing back into Alibaba is a huge thing, and the reason I say back into Alibaba is because he actually sold around 10 million shares just a few months back when they canceled the spin-off of their cloud business. And in my opinion, Jack Ma buying these shares of Alibaba could be him showing that he has faith that the Chinese government is going to do what's right, not only by Alibaba, but also to improve the Chinese economy. And there's no question that China's economy is in a tough spot when you have Chinese strategists coming out and warning of deflation and rock bottom consumer confidence. And the strategist said this is something investors need to be cautious of. The economy here is bad. It's really bad. I've been in China for 27 years, and this is probably the lowest confidence I have ever seen. When I look at situations like this, I always wonder how obvious is it that these things are issues. And for China, over the last year or so, they have tried to ignore a lot of these potential problems. However, more recently, we have actually seen the Chinese President Xi come out and admit that Chinese economy has been in trouble and needs to be turned around. And in my opinion, that is huge, because when you come out and admit that there is a problem, that means that you can take the steps that are necessary to actually fix that problem. And the first big issue is deflation. This is when we start seeing prices across goods, services, whatever it may be, drop in a major way. And this is a very bad thing, because what that ultimately means is that revenues for companies are going to be dropping. They will no longer be able to support as many staff. They'll either have to lay them off or drop wages as well. One thing to keep in mind is interest rates in China. They have done actually a better job of slowly dropping their interest rates. And this is what's created the problem, because they haven't dropped their interest rates down quick enough to really get people spending money. Along with their shutdowns and other issues, that has contributed to this deflation. However, what they can do here in the future is drop their interest rates even further to help promote economic growth. And we can see Chinese interest rates shown graphically here. They're currently sitting around 3.45%. And if we go back to 2020, they were sitting around 4.15%. That means that they've only dropped their interest rates a little over 0.5% over the last 4 years. If we look at the United States, we can go back to February of 2020 and see that interest rates were sitting at 1.58%. And over the next 2 months, the Fed dropped those interest rates down to almost zero. And to make things even worse, they held rates at almost zero all the way through till March of 2022, when they finally started to slightly increase those rates. And that's what contributed so much to inflation. We have seen almost the reverse in China, causing deflation. And for consumer confidence, one of the metrics you can use is GDP growth. And China saw their economy grow by around 5.2% in 2023. Economists are projecting this to slow down slightly in 2024 to around 4.6%. And this is lower than what we've seen over the last decade, as they have averaged around 6% growth from 2014 through 2023. And according to the Bureau of Economic economic analysis, the US economy grew by around 4.9% year over year in the third quarter of 2023. So yes, the Chinese economy is slowing down. However, it's still growing faster than what we're seeing here in the US. And in my opinion, if we start seeing the Chinese government stepping in and lowering interest rates even further, we could start seeing the Chinese economy actually grow at a faster pace. And in my opinion, I think Alibaba could put up some big numbers in their upcoming earnings announcement, which isn't expected until February 22nd of 2024. And on a non-GAAP basis, analysts currently are projecting that Alibaba will post an earnings of around $2.72. Year over year, this would be a very small change from the $2.79 that they posted a year prior. And personally, I wouldn't be surprised if they come in with a major beat, just like we saw a year ago, as they posted earnings of $2.79 compared to analyst expectations of $2.36. This was a 43-cent beat, or almost a 20% surprise compared to analyst expectations. And this is going to be the first fourth quarter that we have seen the Chinese economy fully open in the last 4 years. Keep in mind that a year ago, we were still seeing random cities throughout China being shut down because of increasing pandemic cases. And one of the things most attractive about Alibaba's stock is its valuation. Yahoo Finance has it currently sitting at a 7.18. However, as the stock has ran up in a major way, this is likely closer to a 10 forward P ratio. And on average, over the last 5 years, valuations for Alibaba have ranged anywhere from 20 to 30 for their PE ratio. We've talked a lot about their EPS numbers. However, one thing we need to keep in mind is their top line growth. They are starting to get back to growth year over year. However, it's still in the single digits. I'd like to see this number get back into the double digits, at least 10 to 15%, ideally closer to 20 to maybe even 30%. However, I think that's more of a long-term goal. I think over the course of the next year, if they can get back into high single digits, low double digits, that will be a net positive. And then in 2025 and 2026, if they can start getting to 25 to maybe 30% growth year over year, that would be massive for Alibaba. However, keep in mind that I do own shares in Alibaba. I like the company for the long term, and I clearly think that Jack Ma and Joe Tsai also like it for the long term. I think they're getting in at very nice valuations, and I think that the stock over the next 5 years is going to perform a lot better than what we've seen over the last 5 years. But do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, drop a like down below. If you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.